coming into this earnings season, for the rest of the market, expectations were quite conservative. We had seen a lot of the numbers slashed. That was the opposite for a lot of these tech numbers. The expectations were quite high, and actually they've hit it out the park across a lot of these numbers, particularly on Amazon, where we see the ongoing profitability continuing to ramp up. So actually we've seen some of the strongest kind of gross profits ever coming from the company, and we expect that to continue through the next year as they continue to see the stimulus continuing to have an impact, as well as some of that rebound coming through.
There is, with Amazon, I think, a couple of issues that the market has some sensitivity to. One is to what extent the business has benefited from the working from home trend, both on the retailing side and in its cloud business. Does that represent a cliff edge going forward? You suggest not, but there are those who think as we come out of the lockdown and we perhaps see a moderation of working from home trends, that perhaps we might see revenue lines begin to moderate in these two areas. What do you think?
So I think actually we expect it to go on lower for longer, in the same way we've seen with kind of interest rates and some of these other areas. Things don't rebound. We're not going back to where we were before the crisis. So in terms of some of that ongoing online spend, particularly the e-commerce areas of the business, that isn't something that's going to reverse. Yes, it might come down from some of the peaks that we're seeing at the moment, but as we're starting to see with some of the virus numbers as well, that could be a lot longer experience than a lot of us are perhaps thinking about.